Okay.
Okay, welcome to class. What we'll be doing this will be back testing our strategies that we will be using going forward. We already know the strategies, but we have not really back tested. We just explain those strategies and we've just been trying it on chat. And when you don't back test a strategy, when you don't really know it works, you don't know what to expect when you see it on a chart. I don't know if you understand. When you see it on the chart, you don't really know what to expect. You know, okay, this is how the strategy is. But when you go on the chart and you see it on a live chart, you start, being bothered, except you're a very, very smart person. Because for somebody like me, all I need to do is just to look at another person's chart and know what the person did, and I'll go try it out on my own chart. I'll just go start looking for those variables on my own chart and I'll start using it. So without further ado, we're going to try out our our breaker block strategy, which I sent to the group chat. We're going to try the A plus setup, which I also sent to the group chat. So if you don't remember what the breaker block strategy is and what the A plus setup is, please kindly say something. So I'll easily just tell you right now before we go further in this particular class. So, is anyone confused?
The
Do you
breakup,
know?
the breakup block.
Okay, the breaker block strategy, you don't know it.
Yeah. Yeah.
I dropped it on the group the other day.
Mm,
I told you it's something like this.
yeah. So
Something like this. This is
I've
a
been able
breaker
to.
block. Something like this. It comes like this. It goes like this. This is for a buy, actually. You get? It goes like this.
Yeah.
Let's say it's just more like, how would I put it now? Just more like a resistance. I'm coming. I'm coming. Just should I do for a buy now or for a sell or which one? Okay, let me continue for this one now. Let's say
For a
okay for
buy.
a buy now. All right, good. So this one now, let's say this you want to buy a particular pair and you see that the pair has already moved like this. It went up like this, yeah? So when it went up a bit,
Okay.
right? Okay. It came down, more like it's selling. Okay. It went down, more like it's selling, right? Then all of a sudden, after this kind of sell, right? It pulls to come and break this one.
Yeah.
You know what? You know what the break of this is already a trend now going down, right? This is a trend going down.
Yeah.
Then it went to break this one. So this is
Yeah.
what we call a change of character. Do you get? So we already know this. This is what we call a change of character here, like this. Because
Okay.
you are in a
So it has
downtrend.
broken the last high.
Yes, it now went to break the last high. Do you get? So immediately you break that last high.
The last high. Okay.
Yeah. So what you will now see is that this particular pair moves like this. It moves like this, close to it like this, right? Move close to it.
Yeah.
Do you get? Then it now push
Yes.
down again. Awful time. You see it push down
Push
again.
up.
Yeah, it push up again.
Okay.
Then after
Push
pushing
up.
up, you will see that it now comes back again. Do you get? It comes
Yes.
back up again to come and
Okay.
touch this particular one. You see this one did not touch it,
Okay.
right? This one did not touch this. Then you see this particular one now
Yeah.
come and touch this one properly, like this,
Okay.
before it finally sells off. It's finally buys. So this is what breaker block is about. And this one here
So
is
that.
called an inducement.
Okay.
Do you get? Yes, this one here now is an inducement. And what did I say an inducement is? I said an inducement is what happens, like the chart actually moves you to take a trade even before the real
Okay.
move happens. Do you understand? The chart, it's more like a deceive. The chart deceive you. This is an inducement. It deceive you to take this trade. Probably you
Yeah.
will not take this trade, and maybe some people that use tight SL, right? Maybe as he
Yeah.
bought and he broke this high here, that you say, okay, he wants to buy, you will not enter like this
Enter.
and put your yes, you enter and you put your stop loss below this low, right?
Yeah.
Right? So you see, and you're targeting this last, maybe the trade was coming from here, somewhere here, because that's a trend line liquidity you are targeting. So you are targeting the last high here, right?
Yeah.
So you see that the trade came back,
Yeah.
took you out. It hit your stop loss actually, then started going your direction. And you be like,
Mm.
ah, market is witch hunting me. Ah, this thing have changed character now. Why is it now coming back down? So the
Mm.
first pullback of a trade is actually liquidity. It's actually deceiving you. So you don't enter at the first pullback. But sometimes you study pairs
Mhm.
though. There are pairs that don't come back. I don't know if you understand. There are pairs that don't come
Okay.
back. There is a normal
Yeah.
breaker block where you just see the trade comes down like this. You get comes down, it comes down, yeah, it comes down. Then all of a sudden you see it breaks it like this. So immediately it breaks it like this. It's coming back. It touches this particular breaker block here, and then it zoom off. Normally, this is a
Yeah.
normal breaker block,
There won't be
and
inducement.
yes, there won't
There
be
won't be
inducement
inducement there.
at all. It will just go. Do you get?
Okay. Yeah.
To just go. This is a normal breaker block. And there is one with engineer liquidity, but the one with engineer liquidity and inducement, they are almost the same thing. So I don't really, there's no need to talk about the engineer liquidity. The one with the engineer liquidity with the one with inducement, they are almost the same thing. So, but in all, this one is should I say 70% of the chance. 70% of the chance this goes. Do you understand? This one goes.
And uh, 70,
Uh,
70% of the peers, I mean, different peers,
yes. Any
we
pair you
always
are
have a
trading, yes. If you see anyone that you see inducement has a higher probability of playing out nicely. It's not as if this one does not go. It goes. Do you get?
but not all.
But yes, it goes. Yeah. Even I can say if you see it, sometimes sometimes it goes. Please, nobody should call me. Who is this? Sorry, guys. So most of the time it goes, but sometimes it doesn't. And that's why you stick to high probability trades. What the fuck is this one calling me? Are you normal?
Bro, please, before we continue,
Yeah.
this lady, princess, she has not been active.
Okay, yeah. I think she gave her phone. She said somebody took her phone. And
Okay.
yeah, somebody took her phone to travel. I don't know if the person has brought the phone back or she has gotten her
Okay.
phone back. Maybe I'll reach out to her to know if
All right.
she has gotten her phone back. So because she has not been joining, and I don't know, what's wrong, but she'll be fine.
All right.
Okay,
All
but
right.
do you understand this breaker block now? It's
Yeah.
just all about change of character. Once it changes character, do you get it? It
It
gives you
must
an
come to
inducement.
test that
Yes,
resistance.
it will first of all induce you. So that
Mm.
inducement now, this when it gives you a fake out, then the next one you'll be targeting. Once you see a liquidity, this inducement now is liquidity. Do you understand? This
Mm.
inducement you're saying is liquidity. Once you see it, what you'll be targeting now is the next POI. So this breaker block now become the next POI
You
that
are.
you'll be targeting. Yes. Anyone that you target with liquidity, any trade that you target that you see liquidity on tends to play
Mm.
out more of the time. Because if you don't see liquidity on this particular pair and you take it, you might end up being the liquidity.
Okay.
I don't know if you understand. You know what liquidity is now? Liquidity is money. So you might end up being the
Money, yeah.
liquidity in the sense that your stop loss will end up being the liquidity. You might end up being the inducement. This one now that this one now came here to do might now become the inducement that this one will now come back to like this and go. And you have taken it from here.
And
So
go.
you will now become the liquidity. So
So
oftentimes it's better you wait, it breaks, come back to that particular place before taking it.
that
That you taking it
it's
directly.
better to get for that adjustment first, no matter how
Yes,
long it goes.
it
Okay.
takes. Yeah, it's better for you to wait to see that it has given you
Yeah.
a fake out that it wants to move. But sometimes there are pairs that don't even fucking wait. They just move, they just keep going. They just
Okay.
leave you and just be going. But then it is safer you take a pair that has inducement that has already given you a fake out. You say, okay, you've seen the fake out and it's coming back. Then then sometimes you will just see this kind of move. It has taken here already. It will just move almost to this point like this before
And
going.
then
I'm telling you, it will just go almost to this point. So sometimes it will come and even touch the other block that is here, touch it before going. And you have entered here.
there won't be any zone there.
Yes, there won't be no, there
Just
won't be
come here.
zone. It will just come back here to take it and go. So oftentimes it is better this one has happened, then you take this one as inducement, then you wait for this one to happen. Then on after doing the retest and you say,
Okay.
okay, yes, a bullish move, you see a change of you will still see a change of character on the lower time frame here. And once you see a change of character, or even here on the lower time frame, you say, okay, now I can take this trade. Then you put your stop loss right below it. You will see the way it will just move. It will just move. Yeah. So if you flip this one on the opposite direction, it is the sell. That's what you see on the sell. This is the buy.
Yeah.
This is the sell. This is the buy, and there's the sell. If you flip it, you get the sell. Do you understand? So you already have the
Yeah.
picture. I sent it to the group. You get so you should be
Yeah.
able to if just go and look at it, you'll be able to understand what a breaker block is and the one with inducement. I've already told you what inducement is now. So you'll be able to understand,
Yeah.
okay, yeah, when you see one with inducement, you'll be able to spot it. And way back testing, you'll be able to spot the one that has inducement, and you'll be able to spot, okay, this is time to use it is time to use A plus setup. It is time to use a breaker block. Because
Okay.
what I've actually seen in this market is when you are taking an opposite trade direction is when uh A plus setup really works. Then when you are trading a pullback is when breaker block works. That's what I've kind of understand. Do you understand? But in both cases, we're going to backtest and see how it goes. So that's number one. Then the number two, right, is the A plus setup. So I hope you understand the breaker block.
I understand clearly.
Okay, good. So the A
I'm
plus,
having a practice, so nobody should come and disturb me.
you are having what? Okay,
No,
okay,
I'm
your
talking to
baby. All right, all right. So if the if you understand the breaker block, that's how it works. And we're going to backtest it. You will see it live on chat and how it works. Then
okay.
the second one is the A plus setup. Then how do you trade A plus setup? First of all, you need to understand a trend. Do you get? Let me show you a trend. You already know this trend, so I'm not going to bother myself too much about the trend, but I'm still going
Yeah.
to show you what a trend is. So this is a trend. It's giving you lower high, lower low, right? You already know what
Yeah.
this means, right? You are seeing this in your
Yeah.
chart. You already know, okay, fine, this is a downtrend.
Downtrend.
Yeah, so all you'll be looking for is an opportunity to sell. Then all
Yeah.
of a sudden, what you now see is that this particular pair, right, came and
Yes.
it broke this high here like this. It broke it on a downtrend. right?
Yeah.
You broke it like this. So what will you be looking for now when you see this?
There's a change of character. We are going
That's a
to buy.
change. Yes, that's a change of character. You're going to be looking for a
A
buy.
buy.
Yes. So let me take this one higher a bit. Then let me take this lower a bit. Sorry. Is Taufik here?
I'm doing sir.
Okay, good. Hope you are following.
Yes, sir.
Okay, good. All right. So, um, you see a move like this, right? Then this one breaks this particular move and it goes up. Then what you start looking for is a buy. So when do you know it's time for you to buy? Okay. Uh, this my Fibonacci is actually different. The way I did this Fibonacci is actually different. This one gives you just the discount price of this one gives you the discount price. That's 78 points it's one or so, but this is 71 to 75. I don't know. I can't just start setting it now because I use this fib very well. But then on your own Fibonacci, right? Are you listening?
Yeah.
On your
I'm
own
listening.
Fibonacci, you will see from here to here like this, right?
Yes.
You see the 50%. 50% will be here on your own Fibonacci. There will be 50%
Okay.
like this. You see 50% here. Am I right or wrong? In your own Fibonacci, in these figures, go and check. When you draw it from the beginning to the end of the trend. When you see the trend wants to pull back
The
like
lowest.
this. Yeah. You,
Mm.
you, you say what? When you see the trend want to pull back like this, just go and draw the Fibonacci there. Just go and draw your fib from there to this particular place. Do you get?
Okay.
Then
Okay.
you will see the 50% inside.
Okay.
Do you understand? You will see 50% inside. So in the 50% now, inside this particular zone, right?
Mm.
Inside this particular zone, coming. All right. So inside this particular zone, this place here is a premium zone. So we call this place a premium zone. So what you look for in a premium zone, this is the place you'll be looking for only sell. You'll be looking to sell from here. Do you understand? Because this is 50%.
Okay.
50% up, 50% down. Then here,
Oh, yeah.
this remaining 50% down here now is your
Mm.
discounted zone. It's your discounts. In this, once you are here, this is your equilibrium. Once you are in this zone, right? Once
Mm.
your price now like this moved and gets here, you stop looking for sell. You don't look for sell again.
Oh,
You just chill. You wait for your price to come into this zone before you start looking for buys. You sell from here to this zone. You understand? You buy from this
mm.
zone to this zone. Do you understand?
Come again.
In the premium zone here, right?
Yes.
In this
Yes.
premium zone, you look for sales. As it has broken this structure, you look to sell from here to this zone here.
Okay.
Do you understand? Like this is a structure. Now this is a sell structure. Then you now see price break a structure above. Like this is a change character to the upside. Do you understand?
Yeah.
So when it change character to the
Yes.
upside, once you see that this price now want to start moving back, it want to start moving
Back.
down. Yes, moving
Okay.
down to this side. You look for sales
Okay.
around this zone. You do your Fibonacci from here to here. You divide it by two. So you will see this place
Okay.
is 50%. This place will be 50%. So this my Fibonacci is
Okay.
not giving you that 50% because I have
Okay.
this is I'm only looking at discount zones in my Fibonacci. You understand? So Here now, around this zone is where me I will be looking to buy. Around inside here, I'll be looking to buy here. So that is why I have just discounted zone. So if it's in sell now, we'll do it to the upside. I'll be only having just discounted zone here. So I already know where the 50% is, so I don't need it. So I'm teaching you that because you will need it to, improve further on your trading. So this one now, let me make it clear now. Here, once you see it breaks like this upward, premium, you look for sales. Discount, you look for buys. The 50% upward is the premium, 50% downward is buy because now it has changed to uptrend. So what you are expecting price to do now is for price to come like this, do like this.
Yeah,
Yeah, do like this, then go.
a change of character there.
Yes, price will just sell from this side to this side, then boom, all the way up. That's what you are expecting from price now. So when you are here, you start selling. You sell from anywhere around here, you can sell. Just sell, hold your sell, hold your sell. Then once it enters the discount zone, you start looking forward to close. You close your sales
Okay.
and you start looking for buys. So in the buy now, what are you looking for in the discount zone? That is what I want to show you.
Okay.
Do you understand?
Okay.
So in this discount zone, this place automatically becomes your what? Sweep of liquidity, right?
Yes.
This place automatically becomes your sweep of liquidity. Do you get?
Yes.
So inside this particular
Yeah.
zone now, you will see a structure like this. So like this. Maybe it might not even break. Sometimes it doesn't break it. Sometimes it might just be like this, and be like this.
For me,
Yeah, it might just give you like that, and then boom. Are you seeing it? It might give you like this.
yeah.
Do you get? But
Yeah.
sometimes it may not give you like this. Sometimes it may not just give you like that. Sometimes it will give you like this. You come, you have a sweep, right? Then it will now give you this is your sweep. Then it gives you your
Mm-hmm.
protected high, right? Then
Protected low.
this one, sorry, your protected low. This one becomes your what's it called now? This one now that is breaking this one now becomes your transactional liquidity. This one that broke this becomes your transactional liquidity. And the first pullback, right, becomes your structural liquidity. How many of you remember now? Do you remember? Osalobua. Why are you
Because
so quiet?
Yeah,
Thiago,
Why are you so quiet?
Thiago,
we remember, sir.
Open and never chop food. Forget this thing. This is your word.
that's our
People.
soup.
This is
Sweet.
your sweep. Okay. This is your what?
Yeah.
Reconstruction.
R1,
What's
R2,
reconstruction?
Abi.
Okay. So
International.
this one is your traditional liquidity, right? Then you have your
Yes.
second break of structure, right?
International.
So this one now becomes your traditional liquidity, right?
Yeah.
So some of the times, this here is your
P. Protected low.
Protected low. Do you get? This one becomes your protected low.
Sorry,
So
I want to ask.
this
This
here
transactional
now,
liquidity, can
yeah.
it be the same thing as POI?
No. Transactional liquidity. How do you get transactional liquidity? When you have a transaction is when there is a breakout of the trend. Like this is a trend, and you see a breakout like this of the trend. This automatically becomes a transactional liquidity. This is telling you that okay, now you have a trade to look out for.
Okay. Okay.
Yes, it is a signal for you. It is telling you as a breakout like this now to the upside, it is telling you, okay, now you have a trade. This is what you should now be looking for in this particular place.
Okay.
Do you understand?
I understand now.
Okay, good. So now that you have this, what you'll be looking for in this particular zone of yours, this particular zone, remember, you are only selling here, and in this down zone, you are buying here. And inside this down zone again that you are buying, you will put your trend line again from, sorry, your Fibonacci from here again, from your traditional liquidity, right? Down like this, you put it down from here
Yeah.
to this particular place again, to the protected low, you put it there again. Then you will mark out your 50% again.
Okay.
From the traditional liquidity to the down, you will mark out your 50% again, right? So that 50% now that you will mark out again inside there, you see, my own Fibonacci is different, like I told you guys just now. So if you use your own, you will see your 50%
Yeah.
there. Do you get? Let's go to this particular place now. Look at what I mean. If you check it, this is the normal one. Are you not seeing 50% on it? This is the one you have. Are you not seeing the 50%? This is the 50%. So in your own, it will be showing like this. So you will have this to this place. So you will see 50% here. So inside the discount also, you will still see 50% inside the discount. And your structure, at least in the 50%. What that means is that this structural liquidity you are seeing here must be at least in the 50% or below the 50%. It must not be above.
Okay.
I don't know if you understand. If you do your fib from here to here again, inside the 50% is where your structural liquidity should be, or your inducement
Transactional.
as this traditional liquidity. Once it breaks structure is where traditional liquidity come in.
Yeah.
Then once you have your structural liquidity, yes, or your inducement, must please try and get this thing. Your inducement must be inside the 50% or be at least 50% itself. Inside
The discount.
it's inside the discount. It's just like 50% of the 50%. Do you understand? This side is 50%. Discount is 50%. But inside the discount again, that is 50%.
There's
This
another
50% again,
50%.
yes, this 50% here again
Okay.
is another 100% discount. Do you know? This is
Sure.
100% premium. This is 100% discount. So inside the 100% discount, you are still sharing it again from this traditional liquidity to this protected low as
Yes. Dividing it into
50,
two.
yes, as 50% again. So inside this place now is where you'll be looking for your trade, which is here. So it's either you use your order block inside of this place, or there will be a little breaker block inside here that you'll be using as your POI. Do you get? They might just check, there will be a breaker block here. There might be a breaker block inside or another block inside. That will be your, what's it called now? That will be your
POI.
POI in this place. It's always there. There will be. So that will not give you more risk to reward in this particular trade. So then you target where the trade is coming from. Like you target the first place that is this first break, where the break got to. That is where you target. That's the first place you target. You don't target more than that. Even if it's a swing, but first of all, target this particular place. Risk anything you want to risk, mark it here. Even if you want to risk $50, mark it here. And here to this particular zone is what? 1:7. So $50 times 7 or almost 8. This is 7.8, right? $50
Yeah.
times 7.8, you know how much that will give you, or even $10. $10 times 7.8, it's 780, right? I'll be 78. You
Yeah,
get?
it's almost it.
Yes, that's almost so that's 7.8. With $10, you're getting 78. That's it. You understand? That's it. One of my AirPod is off, so I don't know. Can you still hear me?
Yeah, we can hear you.
Okay, good. My get fuel for Gen. I don't know if it's on my Gen because my battery for the laptop is low right now. But the class is almost over. We have just 5 minutes. I don't know if we can still back test with just 5 minutes. Or should I on the
Yeah,
gen?
yeah,
Should we continue the class? I told you guys it's just gonna be 30 minutes, but do you understand this thing I'm dishing out to you guys now?
we've not done the backtracking.
Yes, sir.
Have you been backtesting? We've not done
Yeah,
that one at all.
okay, we've not done back testing at all. Okay. Um, all right, maybe I'll just turn on the gen then. I'll turn on the gen. Okay.
All
Then
right.
after this class is over, we'll just have 5 minutes. I'll turn on the gen. So, do you have any question as regard this thing I've just explained, the breaker block and
Sir.
the structural liquidity? Ask, I will answer any question.
Hello, sir.
Yeah, I'm with you.
What happened, sir? Okay. So, you see above the traded low.
Who is speaking,
Yeah.
please?
Taufik.
Okay. So
I
your
mean, the
question
stop
is
loss should be above the protected low.
the stop loss.
Yes, sir.
Okay, the stop loss should be above the protected low.
Yes, sir.
Yeah, it should be above, sorry, below the protected low, but
Below, rather.
yeah, below the protected low. But when you enter on confirmation entry, do you understand? When you enter on confirmation entry, you can get you can have your change of character here. You go to your lower time frame, you can see your change of character here. And when you see your change of character here, you can as well risk something huge by increasing. Look at it now. If you put your risk to reward here, look at it. It will be 1:374. Are you not seeing it? 1:374. But if you
Instead
want
of
to
one
maximize,
7
yeah, if you want to maximize your profit, and you see your change of character happening here, right? You can enter and put your stop loss below the low of that trade that happened. There's one stupid trade I took. It's not stupid anyway. I took the trade yesterday evening, and the trade it gave me a confirmation entry, which I entered. Since yesterday evening till this morning when I woke up, it was ranging. Even till about 9:10 when I was still checking, it was ranging. As it just entered profit about $9 to $10, I just closed it because it was like you ranging since yesterday. Only for me to go
yesterday.
and check after I closed from church. Now it went to hit TP.
Jesus.
I'm telling you, it moved. It was just looking like devil's work. The thing moved straight, went to go and hit TP. That would have been a trade for me to have passed my account. Uh, but we'll catch it again. I know I'll catch it. I still have other trades on ground. But the thing just moved. But me, I was just thinking, this one a devil work ability with this one now. So that's how it is. If you get confirmation entry, you'll be able to just lower you understand? You'll be able to tell lot size. Once you see change of character around your discount, your POI, what's not the essence of putting your stop loss below here? No need now. Just put it below the low. And then you see a beautiful trade and a good risk to reward for that particular trade. All right. So any other question? There is two type of entry anyway. There is confirmation entry and there is a aggressive entry. You can set your limits when you know, okay, this PM must buy from here. You can set your limit there. Then put your stop loss at the low. You know, there is no way it will come and break this low. It is going to buy since it has broken like you have seen it. It has broken like this. So your owner is to be looking for buys. Do you get? So now you know this thing as it has broken, it is going to buy. So you are just waiting for it here. So once you wait for it, it enters. It's going to do whatever jargons it wants to do, then buy. Do you understand? So you now you just be relaxing, and the trade will do all the dancing and move to the permanent side. Do you understand? So you don't
Sure.
need to bother yourself. That is uh, aggressive entry. You are not no confirmation, no nothing. So you can still end up not going and hit your stop loss. You're cool. But when you get confirmation entry, you learn to maximize your risk, and also you learn to avoid trades that are not going to. When you don't see change of character, you don't enter now. So the trade cannot hit SL because there are trades like that I avoided. So I'll see you guys when I call back in the next 10 minutes. All right. So if there's any other
Okay,
question,
bro.
you keep it then. But this one,
All
you
right.
understand, right?
Sure. Very clearly.
Yes, sir.
Okay, good.
Clearly.
So the video will be there. You keep watching. I believe this one I will clear your mind on how to take trades. Anyone you see.
Mhm.
Yeah. Then we'll backtest all these things we've learned now in the next video. In the next class, sorry.
Okay.
All right, I'll see you
Yeah, bro.
guys in the next 10 minutes. Ciao.
Yeah, bro.